Every auditor has a moment when the numbers stop matching the story. Mine came on an ordinary Tuesday morning sometime between my second cup of coffee and the daily Teams check-in. The taxpayer, a small nursery and landscaping company, had finally sent over their records. A family business, steady sales, claiming a down year. I remember thinking, this should be routine. Nothing about plants and potting soil says high risk. I opened the trial balance and started scrolling. Revenue made sense for the size of the operation. Expenses, at first glance, did too. Fuel, soil, mulch, payroll. Then I hit the miscellaneous line. $18,000. Rounded, vague, and sitting right between office supplies and utilities. That's the thing about numbers. When they're too neat, they start to look suspicious. I drilled down into the detail. Underneath the bland label were invoices for vehicle accessories, tire packages, and a full-body paint service for a luxury brand I knew didn't belong on their depreciation schedule. The nursery's work trucks were already listed elsewhere. These were personal cars buried in the business. In a C corporation, that matters. You can't call personal use miscellaneous and write it off. It distorts profit, payroll, and taxes all at once. I sat back in my chair, not dramatic, just focused, and thought, this isn't about plants at all. It's about perception. When owners start blending lifestyle with ledgers, they don't just blur a category, they build a red flag. What happened next would test the line between misunderstanding and misrepresentation, and remind me why clean books are the best kind of protection any business has. When I started reviewing the expense detail, I wasn't hunting for a gotcha. Auditing isn't detective work in the Hollywood sense. It's pattern recognition, and the pattern here didn't match the industry. A nursery's biggest cost should be inventory, soil, supplies, and seasonal labor. But this ledger showed vehicle expenses eating a third of the total overhead. For a small landscaping business, that ratio was off. That's what we call a reasonableness test. You learn it early. When a category percentage doesn't align with similar businesses, it's worth a closer look. I expanded the detail and sorted the transactions. The story wrote itself in line items: tire package, premium wax, engine detailing, custom leather interior. These weren't company trucks. These were someone's weekend cars. Under IRS audit procedures, the next step is simple. Verify the business purpose. So I requested a vehicle log, mileage records, maintenance logs, insurance statements, anything tying these cars to the business. What I received a week later was creative. A handwritten list of trips to suppliers, customer visits, and general hauling, none of which lined up with actual invoices or credit card transactions. I called the taxpayer for clarification. They sounded confident, even friendly, the kind of small business owner who's used to explaining away gray areas. They said, "It's all part of the business. I use those cars to meet clients and promote the image." I remember pausing before responding. There's a section in the Internal Revenue Manual, 4.10.4.3, that defines ordinary and necessary. Image doesn't make the list. I asked, "Do these vehicles appear on your depreciation schedule?" "Yes, I think so," they said. I opened the fixed asset schedule while we were still on the phone. There they were, listed as delivery vehicles. Delivery vehicles for a nursery don't usually come with a drop top and custom rims. That's when the red flags stop being theoretical. Misclassification like that isn't just sloppy. It affects taxable income, corporate deductions, and sometimes payroll compensation if the owner's using business funds for personal benefit. At that point, the issue shifted from expenses to reasonable compensation. In small C corporations, owners often skip paying themselves a salary to avoid payroll taxes. Instead, they pull money through personal expenses disguised as business deductions. Cars, insurance, travel, even groceries. It's one of the most common patterns we see. And it's usually not malicious, it's just someone trying to keep cash flow flexible. I prepared a bank deposit analysis to match income, expenses, and withdrawals. That's the backbone of every lifestyle audit. You see where the money actually went, not just what QuickBooks says. The data told a clear story. Deposits supported the reported income, but personal expenses were being absorbed through the corporation. In plain terms, the company was paying for the owner's lifestyle instead of paying the owner properly. The fix was straightforward but delicate. I scheduled a follow-up call and explained that certain vehicle costs would need to be reclassified as personal use, not deductible to the business. I also suggested reviewing officer compensation to reflect actual services performed. The owner hesitated, then sighed. "I guess my accountant should have caught that," they said. I didn't disagree, but I also didn't gloat. Mistakes happen, especially when business owners treat their books like a catch-all diary instead of a financial record. We went line by line. I showed them what belonged where, business use fuel and repairs under auto expenses, personal upgrades under shareholder distributions. Once we adjusted for that, the business's net income changed. So did their salary threshold. For the first time, their books told an honest story. That's the best part of an audit that ends well, when clarity replaces defensiveness. You can hear it in the taxpayer's voice. That shift from trying to justify to finally understanding. By the end of the call, the owner said, "I didn't realize the IRS looked at percentages like that. Makes sense now why it stood out." And that's the truth most people never see. An audit isn't about punishment. It's about alignment. The math has to match reality. I closed the case as agreed, and the owner later told me they fixed their books, set up a payroll schedule, and even hired a local bookkeeper to keep things clean going forward. Compliance doesn't always end in confrontation. Sometimes it ends in understanding. That case became one of my favorites to teach from, because it showed how easy it is for good businesses to create bad optics. The cars weren't the real issue, the perception was. And perception, in the audit world, is everything. When I finalized the report on the nursery case, I remember typing one last note. Case closed, agreed, all issues resolved. It felt good, clean, fair. But it also made me think about what that phrase really means, issues. We toss it around like it's a crime alert, but most of the time, it's just a clue that something looks off compared to the norm. An issue isn't guilt, it's a question. And in this case, the question was simple. Why does a nursery with modest profits have luxury vehicle expenses? The answer turned out to be just as simple, because the owner didn't know what those categories meant. Here's what I wish more small business owners understood. The IRS doesn't start with assumptions, it starts with math. When your numbers fall outside the typical pattern for your industry, too high, too low, too rounded, the system notices. That's all an issue is, a pattern that needs context. And context lives in your bookkeeping. That's why record keeping matters so much. When your books tell a clear story, the IRS can read it without guessing. But when you bury things under miscellaneous or skip payroll or blend personal with business, you create confusion. And confusion to an auditor looks like concealment. During the final call with the nursery owner, they admitted something that stuck with me. They said, "I didn't think anyone would ever look that closely." It wasn't arrogance, but it was honesty. They weren't trying to hide, they just didn't expect scrutiny. But that's exactly how most issues are born. Not from fraud, but from underestimation. The truth is, the IRS doesn't have time to chase everyone. The system is built to look for outliers. If your books make sense, if revenue aligns with expenses, if owner compensation matches effort, if lifestyle matches profit, you're usually fine. The problems start when the picture doesn't make sense on its own. For example, if you're driving a $90,000 car, but reporting $45,000 in income, that's a mismatch. If your expense categories are vague or oversized like miscellaneous or supplies, that's a mismatch. If your payroll is zero but the owner is working full-time, that's a mismatch. Each of those doesn't prove wrongdoing, but together they tell a story that needs an explanation, and the more explaining you have to do, the harder the audit gets. The nursery owner learned that the easy way. After the adjustments, they told me they felt relieved. Their books finally reflected what was actually happening. They set up payroll, cleaned up expense categories, and started meeting with a bookkeeper monthly. That's what I love about preventative work. When people see how fixing their records isn't just compliance, it's control, it lets them make decisions with confidence, not guesswork. I've seen business owners lose sleep over audits that could have been avoided with 15 minutes of record keeping each week. Keep a log, label your expenses accurately. Don't round unless it's truly round. And if you ever catch yourself saying, "I'll fix that later," don't. Because later is usually the moment an issue is born. For me, that nursery case was a reminder of how perception shapes reality. The owner wasn't living extravagantly by their standards. They were proud of what they'd built. But the books told a different story. The IRS doesn't see pride or struggle or context. It sees columns, and those columns have to reconcile. Issues always exist. They're not the enemy. They're just the system's way of asking questions. The goal isn't to fear them, it's to prevent them. And prevention starts long before an auditor ever looks into your case. Next time on Audit After Hours, a case that proves even good intentions can spiral. We'll look at the friendly audit that wasn't, how communication, timing, and misunderstanding can turn cooperation into chaos. When that nursery case wrapped, I didn't think much about it at first. Just another file marked complete. But weeks later, I got an email from the owner's accountant. It was short, just a thank you. We've cleaned up the books, payroll's set, appreciate the professionalism. It made me smile, not because of the compliment, but because of what it represented. Accountability without punishment. That's the outcome everyone forgets is possible. That's the thing about issues. They don't have to end badly. Sometimes they do exactly what they're supposed to. They signal a chance to fix something before it spirals. And that's the kind of audit I've always respected the most. The ones that teach without tearing down. If you run a business, remember this. Every transaction tells a story. The IRS reads those stories through numbers, but you get to write the first draft. Make sure it's honest, make sure it's organized, and make sure it looks like the life you're actually living, because consistency, not complexity, is what keeps you off the radar. I'm Lauren, a former IRS agent turned bookkeeper, and this is Audit After Hours. In our next episode, The Friendly Audit That Wasn't, we'll look at how communication can make or break an audit. You'll hear how a cooperative taxpayer accidentally made their case harder and what that taught me about the psychology of compliance. When the office lights go out, the audit stories begin again next week. Audit After Hours is a Zero Fluff Books production, written and hosted by me, Lauren Twitchell, a former IRS agent turned bookkeeper. This mini-series was created to pull back the curtain on what really happens inside small business audits, and to remind you that understanding your numbers isn't about fear, it's about freedom. Production support, editing, and post-mix by the Zero Fluff Books media team. For free resources, bookkeeping tools, and upcoming podcast updates, visit zerofluffbooks.com or find us on Facebook, Instagram, Pinterest, and YouTube at Zero Fluff Books. Thank you for spending this season with me, for listening, reflecting, and proving that the story behind the numbers always matter. Until next time, keep your books clean, your receipts handy, and your confidence high.